Okay, we're recording this video on Monday, 15th of February 2016, and we got a long weekend in the US. We got President's Day today on Monday, so no trading on the Emini if you're in the US. Hope you're enjoying your long weekend. And we're in the Hawaiian Islands. We're on the island of Kauai, North Shore. We normally arrive here kind of the beginning of January. This year we're a little bit delayed, but we're staying to the beginning of June, so it's still going to be good. And still got some good swells around. I was out yesterday and it was a solid 6 to 8 foot at Hanalei Bay, so that's kind of good. So I'm glad the weather's kind of cooperating. And whenever we're kind of leaving town, moving location, it's always a little bit stressful, a lot of things to do. I don't have time to do any videos on the website. But if there's something kind of interesting happening on the charts, I'll often put a little Google Plus post up. Now, just so you know, you can get to those by looking at the Emini-Watch website. So here's the blog page, for example, and at the bottom in the footer of all of the pages on Emini-Watch, you can see here Barry Taylor on Google+. And this is where I'll put up some Google Plus posts, that things I'm kind of reading that I think are interesting. And back on Thursday, I put up a little chart talking about the cyclical downswing that was due. So that is on Google+. This little chart here, looking at better sine wave, and this was the cyclical chart that was kind of due. Now, one of the great things I love about Google+ is it gives subscribers and watchers of Emini-Watch an opportunity to kind of post their comments publicly, and I love this one from Richard Fallon just in the last few hours, just kind of supporting what I could see on my charts happening, he could see happening on the charts here. End of trend on @es.d with bullish divergence, yet no professional blue down bars, although the TY daily makes it look like it's over for now. Just notice the weekly chart at @es.d has a big blue spiky bar right on support for the last week. Exactly right, Richard. I love all of that. It's kind of brilliant to see people are kind of watching the charts and seeing exactly what I'm seeing. So I'm going to pull those up there and just show you what I was seeing on Wednesday into Thursday's trade. So that is this @es.d daily chart here, and this is a little cyclical cross that we had due on Wednesday into Thursday, and it meant that we were going to put in a downswing, a pullback to end of trend downswing here, and it happened really quickly within the course of 2 days. Basically, you can see how the indicator kind of flipped over here, and we put in a pullback to end of trend pattern, and we now got our support level in, and that's why we had the strength on Friday kind of come in. So it's a nice little chart, shows the exhaustion sell, the bullish divergence kind of come in. This was relatively close to the zero line, so we needed to see something a little bit deeper. We saw that with this little sell-off that we had last week, and now we've got a very shallow kind of bullish divergence kind of come in with a pullback to end of trend at the same levels that we were down at last time back in August when we had the sell-off and the test here. So sometimes the pullback to end of trend happens, with a good deal of days in between the pullback to end of trend going off. Here, bang, 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 testing into those lows and getting that cyclical energy out, and the end of that trending energy out of the market, which leads to this rally that we had. And sometimes the pullback to end of trend signals happen really quickly. The mathematics of the better sine wave indicator flips over really quickly with that strength and support kind of coming in, and there we go. We've got a nice little kind of pattern there. Here's an intermediate pattern that we had 3 or 4 days of kind of strength into an end of trend weakness pattern here, and then we flipped over. So that's looking really nice, and as Richard said here on the weekly chart, now we've got a cyclical support kind of come in here with a big blue down bar, kind of spiky down bar, not unlike this one or this one or this one, and it just shows that on those big sell-off days, that's when the professionals are active. They've got to move big positions, so they need big volume to kind of get in and out, and they buy on those days or those weeks where we have a lot of emotion kind of going on, a lot of people kind of flipping out of their positions, and they absorb that volume and come in and hold the market. So now we got a chance to rally kind of going forward in equities. The next kind of confirmation that we need to see on this is when we see the next cyclical resistance print, and then we break through that cyclical resistance into a trend move on the way up. So that's the real confirmation that we get kind of coming on, that'll signal that this has been an important cyclical support level that's kind of come in to end this trend, and that we'll have a really strong rally from, or a rally from there. Of course, if that cyclical level gets broken in the next few days, kind of depends how it happens. If it gets broken on light volume, an amateur down bar, for example, and we kind of spiked below and just closed back above it, if something like that happens, then again, that's just another testing move. But I'd expect the next place that we're going to look for is the cyclical resistance, and a break through that would be a confirmation that we're back into an uptrend on the way back up to look at 2100. So there we go. Check out the Google Plus posts when they kind of appear. You don't have to subscribe necessarily to Google Plus to get those, but you can see them at the bottom of the website to see if anything's been posted recently. So that was the daily and the weekly chart. We can also back it down to look at the high-level tick bar charts. This is the multiple time frame view of the world, starting with a 4,500 tick bar chart, which takes us up on the 13,500 and the 40,500 tick bar chart here. And if I just show you where the day breaks happen, this was Friday's trade, this was Thursday's trade, this was the sell-off Wednesday into Thursday. And you can see around here we had a whole bunch of really nice stuff kind of going on. We had pullback to end of trend on the lowest time frame, and that's this little just off color red dot going on here. Then we have pullback to end of trend on the intermediate time frame, and that is this red dot, bigger red dot going on here. We had another little, just a tiny little pattern, pullback to end of trend, go off here. All of this happening around critical support on the highest time frame, and we start to break into an uptrend with this break above resistance here, red bars. That exhaustion buy pattern going on there, that's showing this exhaustion buy, was getting the move going. We also have a little bit of a shakeout with an exhaustion sell pattern going on here, and then once we've broken above cyclical resistance on this highest time frame, we're going for a trending move on this highest time frame here. But there's a couple of things kind of going on. This is really nice on this chart. First of all, I talk about the pullback to end of trend patterns rippling through the time frames from left shoulders to the head to the right shoulder and so on. So here's the pullback to end of trend on a left shoulder. Now, I had an email the other day where someone was querying that they thought I was talking about a head and shoulder top being made. Remember, you can have head and shoulder moves happening on bottoms being made, and that's an inverted head and shoulder. Maybe I should be a little bit clearer when I talk about left shoulder on an inverted head and shoulders pattern, but that's the left shoulder of an inverted head and shoulder. This is the head of the inverted head and shoulders, and this you might consider the right shoulder. Now, sometimes the head goes lower, and you got shoulders that are less than the head extension, kind of down here. But patterns aren't perfect, and sometimes the head's a little bit above those left and right shoulders kind of going on here. I mean, that's the beauty of technical analysis. Sometimes the patterns are picture perfect. Sometimes you have to have a little bit of leeway, a little bit of interpretation that goes on. But with the pullback to end of trends on the lowest time frames, they're often happening on these exhaustion patterns on a left shoulder, inverted head and shoulders. Pullback to end of trend on the intermediate time frame, happening there at the head, and then this right shoulder being printed, and that's the breakaway move. And then that's a low risk entry point happening here. Any kind of little sell-off that happens, cyclical support holds, we break into this uptrend and we're away. A little bit of weakness here with these white bars, but because we've not had exhaustion buy going on, that's just showing weakness. That's not showing a change in trend going on there. So we had on these highest time frame tip bar charts, nice little pattern showing Thursday's low being tested, exhaustion sells getting rid of all of those sellers, and now we've broken into a nice uptrend kind of going on here. So that's kind of all nice and pretty. And just a little update on the multiple time frame stuff. Finally got the final coding kind of finished. I needed a specialist coder to help me with the DLL that's being coded for these indicators, and I've got that back from him now, so I'm just going to be testing it. So hopefully we'll be releasing this multiple time frame version of the indicators in the next few days, but as soon as that's done, I'll let you know. Now I want to talk about the global macro charts, particularly crude, because we've had a pullback to end of trend go off on the crude chart, and I'll just pull these up here. So back on the 3rd of February, put up a post talking about OMG, and I'll just go back to that, and this was the global macro charts. Oh my god, and everything changed today. That was the day when we had huge moves in all these markets, these kind of global macro markets, setting off in the other direction. We had particularly, it was the yen trade that was absolutely kind of key to this. Let me just pull up my yen chart. Bang. And that was so let's see, the 3rd, there we go. That was the 3rd of February, and we had a U-turn in the yen going on here. And from that move, we've had this really strong move in strength in the yen, and which has led to kind of the sell-off in the equities markets, the risk-on markets, crude to some extent, and it's been kind of reversal of the carry trade here. That was a really important day, and I said from that move, so when we have moves like that, when we have extreme reversals and all of a sudden everybody has kind of changed position, you can see the strength of the buying that went on the Japanese yen kind of going on here, and all the FX markets and the gold and silver kind of going on. That is the beginning of a move, and it's played itself out for the time being, and what we're going to see is some settling back. This is the retracement where we need to check that this is a real change in trend, that will have weak selling going on in these markets, amateur down bar type stuff, support levels starting to hold, all of those kind of good things going on, that then mean that change in trend is a valid change of trend. The settling back, the retracement part of it is weak, and it just shows that there's no appetite to really sell these markets. It'll be weak selling going on, and amateurs getting wrong-footed, thinking that they got this trend direction wrong. And once that settles in and the support levels start to hold, we can rally back and start getting through this high for a real confirmation of a change in trend of the Japanese yen and all of these risk-on markets. Now, the latest one to kind of print this downtrend has been crude, and crude has been driving a lot of the weakness in the equities markets. We've had this kind of carry trade unwind go on. We've got a lot of the sovereign wealth funds around the world that are, a lot of them are largely based on crude oil, and a lot of commodity markets as well. So all those sovereign wealth funds have been under pressure because they've not got the strength in the revenues coming in from crude, and all of those oil-based economies have, to some extent have taken profits and kind of been scared out of some trades, and that weakness in crude has led to this last weakness in the equities markets and the risk-on markets. But potentially here, with this pullback to end of trend, we have a low being made in crude, and this is a long-term kind of important low. It's way too early to be getting into a long position on crude. I'm not suggesting that. But I was talking a few weeks ago with all these blue professional down bars into an exhaustion sell down here. That's the makings of a left shoulder. But we've gone on and gone even further with an exhaustion sell pattern here into this pullback to end of trend. So we've got to wait for the next cyclicals to come in, resistance to support to kind of be played out before this kind of really tests down. But that level there, which we reached on Wednesday's trade, I think that's Wednesday, on the 11th, is really important as a potential low down here. So we've got an exhaustion sell, huge reading down there that we've reached, a nice little pullback to end of trend gone off. This bullish divergence pattern that printed just there, a little close to the zero line, so we've gone for another kind of sell off. So we've got to put in probably another bullish divergence pattern there, but potentially that low in crude is really, really important. We've also, when I was talking about copper the other day at $2 when we put in this pullback to end of trend, here's the pattern in copper with exhaustion sell, bullish divergence pattern, pullback to end of trend. Nice little pattern happened here. This blue professional down bar was potentially buying that sell-off that we had this week. We got an amateur bar. I would have liked to have seen that being an amateur down bar, maybe below the low of the day before, or having the close below the open, something like that. It was an amateur up bar. It's not a classic in terms of a testing bar, but breaking above resistance here into potentially an uptrend above $2.10 on copper. So copper and crude most likely are going to kind of trade similarly together because they're both representative of strong economic growth, but not that that's what's going on at the moment. At the moment, what's going on is we've just reached extreme levels. So $2 down here on copper and $30, $26, whatever the low was down here is kind of an extreme level. Yep, 2605, an extreme level for crude, so we could be just bouncing off those. Now, I talked about gold and silver. This is kind of the extension that we had. I mean, it's been a huge rally on gold and silver over the last month. And pullback to end of trend's gone off, but we just kept on cruising through here. Exhaustion buys going on. This is back at the beginning of February. This is this move kind of getting going into a change in trend on gold. Now we've had this extreme buying going on. We've got to settle back and into a retracement, find our support levels. They need to hold. Maybe some amateur down bars, maybe some blue professional down bars where the professionals kind of hold a big kind of sell-off that might happen. They'll kind of jump in, but this is the testing place. Once we've broken into an uptrend, we need to come back and test on this retracement. The testing needs to be weak selling going on from where we can rally and through the highs and be confirmed it's a really strong uptrend. Same with silver. Same kind of thing. It's not as strong in terms of the price move that we've had in silver, but this was the breakout into potentially the beginning of a new trend in silver. So now we've got to rest back down. You can see previous areas where we had resistance come in. We didn't really break above resistance, but here's where we had this one where we had a break above resistance was just an exhaustion buy. Bearish divergence came in and it failed. It failed when we got back to support and we broke through support into a continuation of this downtrend. So now we've got another chance to break into an uptrend. We're going through the retracement. Maybe we'll bounce on the pullback resistance level, at $14.50, $15, something down here. An amateur down bar or something like that kind of comes in. We need a weak selling to show that there's a lack of sellers. All the sellers have sold, and then we can rally from there. So silver and gold, we're kind of coming back from those breakout moves. Copper and crude, we're potentially testing into those lows and found those really important kind of cyclical levels. Just show you the difference on the multiple time frame view of the charts. This is crude going on here. This is the trending system on. So white bars all the way down from 110 back here July 2014. So we've been in a downtrend forever, and this is where we've started to see the exhaustion sells, the pullback to end of trend gone off. But you can see it's still all white bars here going on. So we've had no sign of strength yet, no breakout above a resistance level into the beginning of a trending move. By contrast, copper is starting to see those breaks a little bit sooner. So there we go, pullback end of trend on the left shoulder, pullback end of trend on the head of this move, another little pullback to end of trend on the lowest time frame, exhaustion sell, bullish divergence, and we start to break above. We've had two little breaks that have not held so far, break above resistance, but we're starting to see those little signs of strength on copper that we've not seen yet on crude. So it's still a little bit early to have a real kind of call a confirmed change in trend, but all of those things are looking interesting for this left shoulder to be made on an inverted head and shoulders pattern on copper and crude. So last charts I'm going to show you, so these are the FX charts, and we're going to see a little bit of retracement back. I'll show you the Japanese yen. We've had a really strong move after this, oh my god, kind of breakout potential change in trend of all of these markets. Now we've had that little run up. We're going to have a little retracement from there, and you're starting to see that. So this is the euro chart. Ended up with a flush here. We're kind of coming back. So let's see. This was the breakout day on euro. So we're going to come back down into that zone, and let's see if it holds for a confirmed change in trend in the euro. British pound, we've still got to make pullback to end of trend here, but at 42, $1.42 on the British pound, that's an interesting kind of support area. Pullback to end of trend is what I'm looking for on that chart to go off next. Aussie dollar, these have been pretty strong. We had all these exhaustion sell, blue professional bars kind of come in. We've come back up above resistance on the Aussie dollar, and the Canadians showing the same kind of pattern. It's not playing out pullback end of trend quite yet. We're still within the range of this big blue professional bar, so maybe we'll come back down, pull back to end of trend, kind of go off, and all these exhaustion sells, blue professional bars at 68 cents. That's kind of a low for the time being. But I'm just expecting that little retracement move to happen in all of these FX markets. and then by contrast the dollar index should rally a little bit, and the important area is going to be this is this 3rd of February big blue professional spiky bar, where we had basically a signal that we had a potential change in trend kind of going on. So I'm expecting us to come back into this region, into this 97 to 99 kind of region, and just see where it goes from there. If it's a weak amateur up bar and we kind of turn around and go the other way, crack below 95s, that's kind of confirmation of change in trend. So it's interesting times kind of going on here. That crude oil kind of signal kind of going off here, pullback to end of trend, is really important. This is catching knife stuff. Everybody, at some point we'll have this year a change in trend in crude, but was that the low? Was that the low kind of printed? In due course we'll find out, but it'll be interesting to see if that was the day this week where we put in that pattern. So tomorrow's Tuesday, so trade in the E-mini starts back up, and let's see if that low in the E-mini holds, pull back to end of trend, and we kind of continue this little rally that we've got going on in equities. So good luck with your trading.